Welcome to the Renegade Insurance Podcast, a podcast dedicated to agency owners, insurance agents to help you grow your business and be more successful. Every episode, we will bring you a different interview with more information about carriers, contacts, and products to help you every day in your insurance business, to help you with clients and to grow your company successfully. I am super excited today. I get to interview the Chief Legal Officer for Windward Risk Managers. And I have tons of questions because I've been in the insurance business for a little bit, but we've got the expert here, Stacey Giulianti. Welcome to the podcast.
Thank you so much for having me. Excited to be here.
Yes. So I often start with not all of us decided we were going to be in insurance when we were little, right? This is something that we kind of all fell into. But you have a very extensive background that's different than insurance. So I would love for you to kind of start with that first and talk about, what you did before and then how you got into insurance as well.
That's interesting. I'm an attorney. I'm also an accredited claims adjuster. And, very few people I feel like wake up, in the morning. They're kids or they're like in fifth grade and they're like, man, I want to be in the insurance field. And I think that's super sad because I try to tell people, and we go out with the INVEST program and some other programs where you go to high schools and junior colleges, and we try to get younger people, I say that like an old guy, young people, we try to get young people into the insurance field because a lot of insurance people are like me, right? They got gray in their beard, and if they're female, maybe they have gray in their hair. And so they're getting older, and the next generation really has to get into the insurance field. And so what I try to tell people, which is what I saw when I was younger, is that in insurance, if you want to investigate, you want to be like a cop, you can be special investigations. You don't want to sit behind a desk, but you want to be up on roofs, you love construction, you can go into the adjusting side. You like sales and marketing, there's a million different areas. You like math, you've got actuaries and accountants. So a lot of people think that it's just door-to-door sales, which still can be interesting, right? Like old school. But there's so much more to the insurance field. So that's kind of what turned me on, that there were so many different areas that you could get into in insurance. It's not one thing. It's not like some guy or gal with a briefcase, walking around with the life insurance policies in their desk. That might be one aspect, but there's so much more involved. And that's what really drew me to it, the variety of it.
Yeah, that's awesome. And it's a good perspective. You don't really think about insurance in that perspective. So I appreciate that. Let's talk about the company itself, because it didn't start off as Windward. So you're part of the founding members, and the company's been around for a while, which I think is important for insurance agents to know. This is not a brand new company.
Correct.
We've been through seasons. So talk about how the company started.
It's a phenomenal question, and it's kind of a really interesting story, and I won't drone on, but let me give you some of the highlights. So we've been in business as Florida Peninsula Insurance Company, Edison Insurance Company, and most recently Ovation Home Insurance Exchange. So 3 companies under the Windward Risk Management kind of portfolio. And so we've been in business since 2005. Now in 2005, that's the year after 4 storms, which also had 4 named storms. And so we were born right into that kind of crazy time where we said, you can't have any other storms because there have already been 4, right? The universe has already given us 4 storms. It's not allowed legally, I think, and I'm a lawyer, I can say that, to give you 4 more storms. And yet they gave us 4 more storms.
Yeah.
And so we started off as basically an idea on a cocktail napkin.
Best ideas happen that way.
Absolutely. And he was an agent. He was an insurance agent. He was he worked for one of the captive companies for 17 years. And so maybe I was in my mid-30s. He might have been in his late 30s at the time. And he said, there's something called, at the time it was the JUA, the Joint Underwriting Association, Citizens basically. And Citizens has homeowners policies and condo unit policies that they can't place. So you can go to them and take their policies. At the time, they paid you $100 a policy to take as well for your company.
Interesting.
And they did all of the work for 6 months until you got up and running. And he said, why don't we start an insurance company? At the time, I had been an insurance lawyer. I was suing insurance companies.
Yeah.
I was representing policyholders. And I had very good relationships with the insurance companies because that's just the kind of lawyer I was. I didn't have a billboard. I didn't do anything like that. I represented people that I thought maybe didn't get the full value from the company. And I still feel like a plaintiff's lawyer in some way. And so to make a long story short, he had an idea from his perspective as an agent and me from saying, listen, I know the mistakes that insurance companies make. Why don't we find some people that have some actual money, because it certainly wasn't us in our 30s. And so we found a couple of guys who were had just sold another company of theirs. They'd been very successful entrepreneurs. I hate to say it, but Harvard educated. And then there was, my friend Clint and I. And we got together, added a couple more people to the mix. And in 2005, we did our first launch of policies, which were takeouts. We then started writing the following year. And we went from $40 million in annual premium, and next year we'll close in on about $2 billion in premium for our three companies combined. So that's the story.
Do you think that 2005 version of you imagined that the company would be where it's at today?
You know what? It probably was delusional enough to think that it would, because it's funny. My original business partner, Clint, and I said, we're going to make this company $1 billion. And I mean, our investors and the people involved, they could not believe that was you can't get to $1 billion. Nobody gets to $1 billion. If you get to $100 million, we'll have a party. And by year 2, we were already past $100 million in premium. So, I have this optimism that I think I'm going to be able to do almost anything I want to do. So yes, I thought we would do it, but most people just laughed and didn't think we could. And, you got to follow your dreams that way.
Yeah. And 20 years later, you're still here. So that's a good testament about the company, the founders, the people that are there, and probably the culture behind the company as well. Yeah,
we're still there. It's all the same ownership group. In fact, we haven't added any investors since we started. It was all basically friends and family money. It was the people that I said, our original business partners that were more successful than we were at the time. Some of their friends and their contacts from business school, some of their family members. That's where the money came from to start it. And so it wasn't like, we were originally big time insurance people, or we had all kinds of money socked away. We had to cobble together this business. And even though it's an insurance company, we didn't have some huge, retirement fund say they were going to put $100 million in for us. We had to kind of do it step by step. So it's a little bit different.
Okay. So then growing the company, I'm interested to know about the culture. What's important to you as you guys continue to expand and grow the culture of the employees in the company. Talk about that a little bit.
I will tell you, the culture that we have is honestly because we have a very flat organization. And so while people have supervisory titles and I'm the chief legal officer, the only reason I'm chief legal officer is because I was the only lawyer in the group that started the company. There was no competition.
Default.
Right. People are like, I'm default. How'd you get that job? I'm like, I created the job. I didn't get hired. No one would have hired me, right? I had to start the company to get my job. So, it's a little bit like that. But in terms of how we kind of grew everything and the original people, the culture, we have the same leadership group. We have the same stockholders. We have almost all of the same high-level directors have been with us for years. 10 years is even on the low side. We've had people 15, 18, even since the beginning, 20 years that have been with us. And so while we do foster younger talent, of course, and they work their way up, we're a very flat organization. You can walk in my office at any time. My business card has my cell phone on it, which I give to whoever, customers. It doesn't make a difference. I don't have a secretary. I don't have an assistant. I've never had one in 20 years, and so I don't make lunch through my assistant. You could do that, but I don't have one. It's that type of flat organization. So I think that's the culture. The culture is it's a group of diverse equals. It doesn't matter what race, doesn't matter what gender we don't care about. What we wanted the best people that can work in our company to help us go like we did from next to nothing to $2 billion. So that type of straight line organization allows people to give ideas right to the CEO, right to the CLO, right to whoever, without having to go through 15 levels.
Yeah, and it's probably why you keep people longer, is because you have created that type of environment. And that's cool, because then people can come to you when they've got problems or issues, and they feel comfortable and confident and know that they're going to be heard and listened. So that's awesome.
I think it's building a culture is not just, we had a foosball table. We thought that was going to be the culture. I'm going to tell you, it lasted 24 hours.
That's it.
And one of my partners, the CEO, said, I can't hear myself think. You hear the foosball, that ball smashing around, the foosball table is going.
Gotcha.
Let's build a culture, not where you promise someone a neck massage at the end of the day, or you give them Hershey's chocolate bars. That's not culture. That's just gimmicks. So a culture is when you allow everybody to have an idea and a say in where the company is going, and you truthfully listen. You don't do what I call fire hosing. Hey, I have a great idea, and you turn on the fire hose and say no. It may not be the best idea. There may be parts of that idea you can use, but you want to encourage people to give you those ideas because these are the people in the, quote, trenches that really see what's going on. So without that, you don't have a business like that.
Right. Very good. All right. So we're going to switch gears a little bit and talk more towards the agents. 3 companies, different products. Can you go over a little bit about each company and kind of the importance of what we should know as insurance agents?
So in the state of Florida, whenever you want to basically change an algorithm, and I don't want to put anybody to sleep, but when you're trying to sell a certain type of policy, you want to have different algorithms. And the Office of Insurance Regulation doesn't really allow companies to have multiple programs. It's almost like you have to have a new company to go after each segment of the market.
Gotcha.
So Florida Peninsula was our original. It still sells a lot. It does well in certain areas. Now, I'm not in underwriting, but I do know that it does better with older homes. It does better with homes that are closer to the water. It's kind of an old line, very stable algorithm. It's a very fair algorithm, but it's less granular. And so again, I'm going to make up some of these numbers in the sense that I don't know exactly. But let's say that you have an insurance company that uses territories, right? If your listeners are agents, territories. You could say, well, a territory could be a zip code. And so there's a certain number of zip codes. Or let's say a county, and in Florida there's 67 counties, so you have 67 territories. So in Florida Peninsula, let's say you have a few hundred territories. What we did when we launched or relaunched Edison Insurance Company, Edison Insurance Company is better with very new homes. It's also very good in certain kind of gated communities and in other areas. Again, it depends. You have to kind of put your numbers in and find out what's going on. But when you go after that, it's got 1,500 territories.
Wow.
So
Big difference.
it's much more granular.
Right.
And so it allows you, every insurance customer is paying for somebody else, right? You put all your money together. That's what insurance is, right? The insurance company is really just holding money, and we take a fee for running the insurance company. That's why it's a low margin business like groceries. It's not a huge margin business. It's because the money we're holding is not really ours. It's the customer's money that goes to pay those claims, and you have a few percent for running it, right? That's how it works. And so when we have a lot more territories, it's a lot more fair. Because why am I paying for somebody who's a mile closer to the water than me and maybe has a higher risk of getting hit by a hurricane, or maybe they're farther north and they get hit by hail? So it's more granular. And then with Ovation is a reciprocal exchange. And so the individuals who are the policyholders who put their money in are putting in the surplus. And so it's more like when you have a company whereby you're all part of a group, like firefighters, or you're all part of some kind of organization. It's a bit more similar to that, where kind of people are sharing the risk. Right. So it's a little bit of a different model, but that one is even more granular because the math has gotten so good that we can prepare almost a balance sheet on each policy that comes in to see what the risk is going to be.
Wow.
Is it going to be profitable for us? Is it going to be profitable for our other policyholders? Meaning, if we take in a bad risk, guess who's paying for it? Remember, it's not our money. It's other policyholders' money that's going to pay that risk. So our job is to protect that by getting the best possible risks at the absolute correct price. It can't be too expensive because no one buys it, but it can't be too inexpensive because then you lose money on that policy.
Almost like buying a stock in a company.
It is. It's like buying a stock in a company. You've got to be very careful about what stock you buy. I tell people, I say, listen, your insurance is, $4,000 a year to cover my house. Really? Okay. Well, how much is your house worth? Well, it's $700,000 house. Okay. And so that $5,000 or $4,000 doesn't just cover that once. If it burns down or something happens twice or 5 times in a year, I'm on the hook for that whole amount. Right. Oh, by the way, it's also got $300,000 in liability. Mm-hmm. So when the pizza delivery guy or gal accidentally slips on wax that you left when you were waxing the floors, guess what? We pay for that. Oh, we also pay for the lawyer, which isn't part of that $300,000. We cover that no matter what the cost is. Yep. And then you put as an agent, all of the other coverages that are involved. You want to take that risk for me for $4,000? You're welcome to do it.
Yeah.
It's not a big premium when you look at it that way.
Yeah, and that's a good explanation as well. So you talked about an exchange. Ovation is an exchange. I think that's relatively newer in the Florida market. Do you think more insurance companies are going to continue to go that route as well?
The answer is yes, because I think from an economic standpoint, because of the way the surplus is input into the company and the way it kind of connects the policyholders, I think it's a little more personal in that regard. There's a subscribers advisory committee, so the subscribers have a voice. They elect a board that can ask questions and can raise certain issues to management, which we have to respond to. So I think it's a little bit more positive, and I think it's a bit more modern in that sense. Not some old, stodgy insurance company, we tell you what to do.
Yeah.
It's a bit more interactive in that sense, so I do think companies want that, because if you don't do it and you're not interactive, your competition is going to be interactive. They're going to be asking their policyholders and subscribers what it is they want to see in a
Right.
policy or in a form, right? And if you don't do that, you're left out in the
So
cold.
it's like staying competitive in the market.
It's 100%. You know this from your business. It's being competitive. You have many options when you're placing homeowners or condo unit or a dwelling policy for a landlord. You have options, and if we're not offering the best in terms of price, but also in terms of coverage, and also in terms of who it's for and who it's directed at, you're going to sell another company. Listen, I know you. You're very well connected. You know people at all the various companies in South Florida. And a lot of the companies are good. Listen, we're good. Our competition is good. These are good people writing a good product. So we've got to differentiate ourselves. And that's some of the way that we do it. So I do see more companies going towards that reciprocal model.
Gotcha. And talking about differentiation, do you see any of these companies or perhaps a future company expanding product lines, like being able to offer other types of products? That's one thing as an insurance agency, the stickiness of a client is to be able to get multiple lines of policies for the client so that we're keeping the client. Do you see that in the future at all for any of the companies or potentially a future company?
Now, that's a very deep question. And the reason I say that is because companies like ours, it's been 20 years, but in the first 10 years, you're just getting your feet wet, really. You're just finding out what the marketplace is like. And so we really focused on homeowners. So in HO3, HO4, HO6, we've added a DP policy. And we do have some other kind of minor allied lines that we do. We do some flood as kind of a broker-ish through the NFIP and also through private flood that's reinsured. But we haven't really thought about, say, going to auto, pet insurance. There's so many various areas. You can add on, like a credit life type policy, so it pays off the mortgage if someone passes away. We have toyed with those, but honestly, those are specialty areas. And I'll tell you something. When I walk into a restaurant and the menu has Chinese and sushi and burgers and steaks and Mexican food, I'm not eating in that restaurant,
No.
right? I get very nervous, okay? And I like my food, okay? If you're seeing me on video, I like my food. But I'm telling you, you want to be a specialist at something. And I think for us, residential property is a specialist industry. 10 years from now, could we be in auto? Could we be in some other lines? The answer is it's absolutely possible. But I really do think you have to be ready. You have to have the right people, the right marketing plan. Because I understand from your perspective, you want it sticky. But it's better to be a master of something than, you do a little bit of everything.
Yeah, great analogy. I wouldn't want to be in that restaurant either.
I've been in that restaurant, right? And you open the menu and it's pages and pages. I mean, if you're with a lot of people, I guess that's good. But when someone is having a different type of cuisine than you, I feel like maybe you ought to find someone that knows how to do it better. And I think that's the same thing in insurance. Stick with someone who does something the best.
Yeah, sounds good. You probably have a different perspective, a lot more involved in like the reforms that happened the last couple of years in Florida to hopefully help our insurance. Can you talk about what you've seen as far as like the last couple of years since some of those laws went into place, some good changes, advantages, and then what you think the future might look like because of those changes?
Absolutely. I happen to also be vice chair of the Property Insurance Committee for the Florida Insurance Council, which is one of the organizations. I'm a representative member for the Florida Casualty and Property Association. I don't say that to pat myself on the back. I say that because, like you, right, it's these extra things that we're involved in that's more work. We don't have enough work to do, so we're going to get into more things that we,
but
right?
It's a unique perspective being involved in all those areas too.
Yes, you get a unique perspective, and you're allowed to speak with other insurance companies when it deals with legislation, right? There are laws about when you can talk to other insurance companies and what you can talk about. But when you're all trying to do something to make the industry better as a whole in terms of legislation, you're permitted to do so. And so in these groups, that's what we do. We try to figure out what are the problems overall, either for consumers, for the industry, rub points, and we try to solve them. Now, a few years ago, and I had been on both sides. I had sued insurance companies. So I knew that industry, that side, did that for 12 years before I started Florida Peninsula as our first company. And I've been an insurance lawyer for 30-something years, 33 years, I think. Yes, since I was 5 years old, exactly. No, I don't look that young. But for 30-something years, I've been an insurance lawyer. And so what they basically did is they did a couple of things. The first thing was the most obvious, and they took away what we call one-way attorney's fees. So to make a long story short, we would offer $5,000, which we absolutely thought was a fine offer on, say, some flooring. And then somebody would come back and say we wanted $20,000, and we would somehow settle on $7,000, but then we'd owe them $100,000 in attorney's fees because they filed suit. And so now we've got to go back to our policyholders and say, well, yeah, we paid this $10,000 claim, but we had to pay $110,000, and now you have to add that to your premium because we had to pay these attorney's fees. And so it made it very lopsided, and it created this cottage industry. And again, I'm a lawyer, and there are always disputes that rightly need to be brought to court. No insurance company is perfect. But when you take a claim that you should pay a few thousand more, arguably, and you're paying $100,000 more, and that's not an exaggeration. It's considerable. It's considerable, and it adds to everyone's cost. And it's not necessary. There are better ways to get to get to the table and try to figure out how to get somebody more money if they really can't repair that flooring for the price that your program says. So it helped on that because it took almost all of that out of the system. Now we still have legacy, right? We still have cases from before the law changed and as it was changing and finally went into effect, and then you roll it out through the policies. That's
interesting. I didn't know that.
Yeah. Okay. Oh no, we're still, there's still hundreds of lawsuits from the past, and there's tens of thousands in the state of Florida that still have to work their way through the system. But that was the biggest change. One of the other changes was when I first started, you could report a claim years after, and there was nothing in the policy or in the law that said you couldn't do that. And then they changed it to 3 years, then it was 2 years, then it's 1 year. So now there's no reason you can't report your claim within a year to your insurance company. Right. There's no reason you've got to wait years.
Yeah, and if you have damage, then you're going to continue to incur more damage. So why not file the claim?
And that's exactly. And knowing that from your perspective, as you deal with customers all the time, if you don't get something repaired quickly, it's going to get worse. And then we're expected to pay for that. And it's not fair, again, to us or to the other policyholders whose money we're holding on to and we have to pay out.
Yeah. So future-wise, should be great for Florida.
That's the point. And so we've announced, I think since it's happened, we've already had 2 or 3 rounds of rate reductions. We have another rate reduction. Again, my numbers are going to be approximate. But we have another.
You to it.
Don't hold me to it, but it's around 10%. I think it's like 12% for condos and maybe 9% for homes that are going to be another reduction. We reduced last year around the same amount, another reduction. And that was just approved, but it won't take effect until policies start renewing in April. So from April of 2026, right? And then for 12 months thereafter, people are going to additionally see decreases in the rates from Florida Peninsula, Edison, Ovation, things of that nature.
Yeah, depending on policy, territory, full disclosure.
And that's true. There's also inflation, so people see their rates come down, but their premiums stay the same. And that's the agents know this, but it's important to explain that to the customers. If your house was $300,000 and now to repair it because COVID supply chain issues and inflation and lumber costs have gone up, it's now $350,000. We're insuring another $50,000.
Right.
So even though the rate went down, the premium might have stayed the same because we're now insuring you for $350,000, not $300,000. So there's a little math that goes there, but overall, it's always good when prices go down.
Yeah, and I think it's important for agents to be able to look at the policy year over year and look at that to see what the coverage changes are to help explain that to the client. Because a lot of times they just want to understand why. And when you can explain that, then the client's good.
I think, I mean, we don't really, we're not a direct company. We've never, you ask about future plans. We don't want to go around agents. We want agents. One of our founders is an agent. We believe in agents. We've got, 3,000 independent agents around the state. We believe in the agency model. We don't have you can't call us up and just buy it directly. It doesn't work like that. And so we believe in the agency model because agents are, like you said, they are explaining to the customers those items that, frankly, we can't always do, right? If we have 400,000 customers for our three companies, it's a lot of phone calls.
Yeah.
But you may have a few hundred, and they don't call you every day. Maybe you have a few thousand. And when they call, you can sit down and explain, you or the people in your company, what's happening, how something works, what to expect, and it really helps the insurance companies as well.
Yeah, very true. So let's talk about AI. For me, my extent of AI is ChatGPT. Buzzword around it, but I would like to hear from your perspective how you feel like it's going to help the insurance, industry, both from like your perspective and maybe from the agent's perspective as well. If you can touch on that a little bit.
See, I think AI is, on the one hand, I don't want to be a Luddite and say the hype is overblown, because every time I say that, I look at a new product that comes out, and I'm blown away. Mm-hmm. There are absolutely kind of the next generation of insurance executives, people that are going to really utilize AI. In my role as general counsel, as chief legal officer, I use certain proprietary products that allow me to draft corporate minutes. Doesn't do it all for you yet, but it gives you a great start. It helps me do contracts, redline contracts, review vendor agreements, draft quick letters. So in my kind of C-suite legal end, it does a lot for me that I used to have associates do, redlining contracts, reviewing items, comparing different versions of contracts. It makes that very easy. But what you're asking really is more insurance. And so I do think we're a few years away from, despite the Florida legislature being very upset that AI is going to make all the decisions. I hate to say it, I wish it would make all the decisions. AI is not that good yet in that regard. AI is incredible in certain things. But in terms of being able to kind of look at a house and come up with a price and figure out what's realistic, and I think it's still years away from that. So do I see AI getting involved from an agent or an insurance company perspective and kind of taking over in the next, 3 to 4 years? I really don't. I do see that it helps, for instance, let's say in underwriting. So we'll take a look at roof from satellite photos. Obviously, we have live people do that. But what's coming into play now is some AI that will look at the roof and then will present to the underwriting technician what right? Is it a he or she? I don't know. Yeah. It's an it. It looks at it and it says, there may be some issues with the roof. This is what you should look at as a human being. And then the human being takes a look at it, and you can make all kinds of assumptions based on your knowledge and your construction background and your underwriting background as to whether or not that particular roof item is going to be an issue if we accept that policy. So I think in the next several years, you're going to see more of that assisted AI, where it helps agents and it helps the customers and it helps the insurance companies take a look at a risk or take a look at a claim, but it's still not close where it's going to do all of the claim work for you. It's not yet.
It takes the emotion out of it, which is a great thing. And in that situation with the roof, it could say, like, based on that area and the trees and the way that the sun and the house faces, this could happen. Whereas that's not something, my brain wouldn't necessarily think about. So I like that from the AI technology, and just to be able to streamline things a little bit more for us, just helps us to help more clients and be more efficient. And like I said, take the emotion piece out of it, because insurance is a lot of numbers and data and logic, so that's good too.
But I do think just to say streamlining, I think the answer is not solving it for us, but it's streamlining it. Right? I went to write a recommendation letter for someone, and I'm like, let me check out ChatGPT, right? I mean, I have that too. I don't use it for legal work. I don't use it for anything sensitive. But for writing I said, these are a couple facts about this person, and this is who I am, and I want you to write a recommendation letter. And I don't think I had to change anything. It was a great recommendation letter. So to the person that I wrote the recommendation letter, I apologize, but ChatGPT wrote it.
Yeah.
So, it is absolutely useful for streamlining, not taking away responsibility, but making what I already do faster.
Yeah, you touched on something I'm curious from a legal perspective. ChatGPT, I've heard other agents that will drop the entire policy into ChatGPT and, ask them questions on it. I don't know where that data is going or who has that data, so I personally wouldn't want to do that. Can you talk about that? Just curious, my own personal question on that.
It's a great point. It is public at that point, and there are some lawsuits where companies were actually able to obtain data from ChatGPT. So if a company drops in, a merger, State Farm and Allstate, and this company and that company are going to merge or something, and the lawyers drop that into ChatGPT, somebody could find out about that, could ask for that, could subpoena that information and get that data and utilize that for nefarious purposes. And so the fact is, if you're putting something in ChatGPT, it's not. That's why I put in, if I need a recipe or something, or I want, like a workout plan to get super buff, which obviously I haven't used yet, but ChatGPT tells me how to do it. You apparently use it, which is fine because you're obviously in good shape. But me, I think I need to listen to that. But the point is, it's good for certain things. Don't put private information into any of that because it absolutely is public record at some point.
Yeah, thank you for validating that because I was always nervous. I just don't know where it's going. So
we use personal items, very proprietary for legal. Very, very careful with that.
Gotcha. So as we start to close out the podcast, we're talking to insurance agents, agency owners. Why work with your company? What sets you a little bit apart from some of the other companies, maybe in how you treat your clients and agents, partnerships, things like that?
I'm going to start by saying something maybe a bit controversial, and I think the domestic companies, what we call the Florida-only companies, I think are all really good. I think as a general rule, it's a really good group of companies. We are very differentiated, but my competitors are good companies. If you're with them, you're with a good company. And so I wanted to start by saying that because I think there's always kind of an attack on, the domestics, you're not as good as such and such. And the fact is, we're more knowledgeable about Florida. I've lived in Florida. I make myself an old person, but I moved to Florida when I was a kid in the 1970s. So I know Florida. I've been here. My partners have been here. And so we love this state. And I think a lot of the domestics really know Florida better than companies that are based in, Indiana or Chicago, to name a couple. And so that's number one. Number two is our company really tries to do what, this is we don't use this tagline anymore, but I'm still using it, fast, fair, and friendly. And the reason I think about that is because I was a plaintiff's lawyer. And our original business partner was an insurance agent, okay? And the other two people that helped us start the company were in customer service. They were not involved in insurance. They were in customer service for telephone communications. We didn't start like that as an old line insurance company. We started with something fresh. And so we have a different perspective that we bring to every single thing we do. I look at trying to be fair because I used to go after insurance companies, and I never wanted to be a part of something that's we're going to hold this money up. It's not going to happen. And so when you come to a company like Florida Peninsula or Edison or Ovation, you're getting a management company and a team that doesn't just preach fairness, but we came from it. We expect that. We expect friendliness. We're trying to utilize some of the chat features and things like that, but if you call, you get a live person. And, they speak English, they understand you, they will help you, they will follow up. There are always issues, but we go that extra mile. And so our organization allows policyholders to get the information, to get the best price they can, and to be there at the end when something happens, should something go wrong. So I do think a lot of the companies are good. I do think that we are better because of the way our organization operates and the way we were founded. And that's just a little differentiation. So I hope agents and customers will give us a shot and see what we have.
Yeah, it goes back to the specialist mindset.
Correct. If you're a specialist in one thing, you're going to do better than if you're a generalist in many.
Awesome. Well, thank you so much, Stacey. I appreciate your time today and the information you've provided on the podcast.
Thank you so much for having me. I love the podcast, and I'm excited. I was excited to be here. Thank you so much.
Thank you. Thank you for tuning in to the Renegade Insurance Podcast. If you would like more information, would like to join the Renegade Insurance family, go to renegadeinsurance.com today.